A guarantor loan allows you to purchase a property with bare minimum deposit or no deposit at all. Guarantor loan is generally used as a source of security rather than a source of borrowing power. So if you had no deposit and your parents had plenty of equity in the current property, that allows you to use their equity as a deposit for you to purchase your next home. This is why a guarantor loan is so powerful and so beneficial, because it allows you to purchase and move and get into the property market a lot faster without any deposit. Good day everyone, it's your host here, Tony Shah, and welcome to another episode of the Mortgage Chat. Now today I want to talk to you about guarantor loans and how this benefits for any buyers out there that has no deposit. So you're probably asking, how does a guarantor work? Because a lot of people out there actually don't know the logistics or how it actually works. Essentially, a guarantor loan allows you to purchase a property with bare minimum deposit or no deposit at all. And how does that actually work? Well, it's essentially using your parents' property as a guarantor to cover the deposit that's needed to meet the bank's requirements. So a guarantor loan is generally used as a source of security rather than a source of borrowing power. So if you had no deposit and your parents had plenty of equity in the current property, that allows you to use their equity as a deposit for you to purchase your next home. So as long as you're able to service the loan, a guarantor loan can be pretty simple. So let's talk about the benefits of using a guarantor loan. So the main benefit is you don't need any deposit. Essentially, you can borrow 100% of the purchase price plus costs. And the costs, stamp duty and solicitor fees. And because the guarantor security covers the 20% deposit plus stamp duty, there is no requirement to pay any lender's mortgage insurance. A lot of first home buyers out there believe that even though there's a guarantor loan out there that can be used, you still have to pay lender's mortgage insurance. So it allows you to purchase a property ASAP without the need to save your 5% deposit to use any government grants. And even if you have the ability to save up the 5% and use the government grant and government guarantee and also stamp duty waiver, that only has a limitation on the purchase price you're allowed to go up to. So what happens if you want to buy a property for $1 million, 1.5 or even $2 million? Those price ranges are over the cap of the first home loan deposit scheme and any stamp duty concession or waivers. Therefore, a guarantor loan can be really helpful in those scenarios. And lastly, it doesn't matter if you're a first home buyer or have an existing property or have owned a property previously, you can still use the guarantor for whenever you like. Doesn't matter if you're using the guarantor to purchase an owner-occupied property or investment. A guarantor loan allows you to either buy an investment property or an owner-occupied property. There's no restrictions on it. But you have to remember, some banks do have restrictions on who can be a guarantor, such as they can't be retired and they are working in the capacity of a part-time or full-time. But however, there are some banks that don't really mind if they are retired or working part-time or casually. But these days, there is only really a handful of banks that actually do guarantor loans. So now let's talk about the logistics of how a guarantor loan works. And it comes down to two things. The first is borrowing power. The second is how much usable equity your parents have. Let's say I'm in New South Wales. I want to buy a property for $1 million. Stamp duty for $1 million is about $40,000. And if I didn't want to pay any lender's mortgage insurance, I need 20% deposit, which is $200,000. So just to purchase this property without lender's mortgage insurance and not being able to use any government grants, I need $240,000. And how many people in New South Wales right now have $240,000 as a deposit? So this is where a guarantor loan can come and help you. But the most important thing is the guarantor has to have enough usable equity in the current property. Let's say your parents' property is worth $2 million. The bank will lend up to 70% of $2 million, which is $1.4 million. And let's say for argument's sakes, the loan is $1 million right now, still attached to that security. So $1 million minus 1.4, that means there's a 400 grand difference, which is the usable equity that you can use as part of the guarantor loan. And remember the example I just showed you, for the 20% deposit plus stamp duty, you need $240,000. Now, because the guarantor has usable equity of 400 grand, that means the parents have sufficient usable equity to be used as a guarantor security. Therefore, if borrowing power is not an issue and you can service the $1.04 million, you're essentially borrowing 100% of the purchase price plus costs. So essentially, we're going to use your parents' property as a security guarantor, which is worth $2 million, which will be tied up against your existing property together. And your parents will be guarantoring the 20% deposit plus stamp duty, which is $240,000. And simply, that's how a guarantor loan works. Okay, so now my borrowing power is not an issue and the guarantor security is not an issue either. So therefore, the guarantor loan is not a problem. Sweet, go shopping. But let's talk about how to remove the parents as a guarantor. So essentially, there's 3 scenarios where you can remove your parents as a guarantor. The first scenario is you pay down the loan to a level where the loan is 80% of the value of the property. The second scenario is the value of the property increases significantly where the loan becomes 80% of the value of the property. The third scenario is a bit of one and a bit of two, where I've paid down my loan and also the value of the property increased. Therefore, the loan becomes 80% of the value of the property. And the scenario 3 is the best scenario you can get. So let me give you a quick example. Let's say 2 years ago, I purchased a property with a guarantor and my loan was 1.04 mil. And within those 2 years, I've paid my loan down from 1.04 mil to $1 million. But at the same time, in the last 2 years, the property has boomed so much where the value of the property became $1.25 million. Hey, do you know what? 80% of $1.25 million is actually $1 million. Therefore, because the LVR is 80%, I can remove my parents as a guarantor from that day. Because the property market has boomed so fast the last 4 years, we've actually been able to remove the parents as a guarantor within a 2-year time frame. This is why a guarantor loan is so powerful and so beneficial, because it allows you to purchase and move and get into the property market a lot faster without any deposit. And if you try to save the 5, 10, 15, 20% deposit plus stamp duty, mind you, you'll be saving a lifetime because the property prices are actually moving a lot faster than what you can save. And because the property market is moving so fast, which is exceeding the rate that you can save, you're actually prolonging your opportunity cost where you can get into the market earlier. And because you're always chasing your tail to save up that 5, 10, 15, 20% deposit, you're actually prolonging your ability to purchase and get into the market earlier. So guys, there you have it. I hope you're experts in guarantor loans now. I'm your host, Tony Shah, and thanks for joining me in another episode of the Mortgage Chat. And I hope to see you next time.